Yo, welcome to the channel, man. I feel like the channel's been growing recently, so let me reintroduce myself for the new people. Obviously, what I'm doing here is basically me on the journey. I started learning 2 years ago properly. I was in trading before, but I started learning 2 years ago properly. I dived into ICT, and then obviously I bumped into Waka's videos, and that's where I got a bit of clarity in terms of what's actually happening in the markets, and that's what I've been using. So in this video, what I'll be doing is this week I learned something, and I actually would like to share it. But yeah, basically we knew where price was going. However, we just weren't finding our setups. But then I found this. I wouldn't say it's a new setup because people probably trade this already. If you trade Wacko for something, I just couldn't be asked to learn that because yeah, it was just long in it. I kind of understood everything before, but now it's made so much sense. Not necessarily using whack because I don't know what the hell that is. It works. I'm not saying it don't work. It works, but I just don't. I didn't have time to learn it. So basically, what I found was more like how to know whether it is a bullish accumulation or a bearish accumulation. And yeah, man. But let's go into it. Let's go into it. Yeah, let's go into it still. So obviously, let's go to Monday. Start the week on Monday. So we'll go for it. Start a new one from Monday, and we're gonna see what happened. We're gonna go through it together. I'm not gonna take long though. Don't worry. Where the hell is it? Alright, cool. We're gonna go. You know what? I think doing this will be long. So we'll just walk through price in it. We'll just walk through price. If you have to use the replay, we'll use the replay. But cool. Let me go on a 4H. 4H, and we're gonna start. So Monday would have been Roscoe. Well, Monday would have been around here. Yeah. What did Monday do? So before Monday, what did we have? We had a BOS, right? And we came down. This was our daily. I'm guessing they're classifying this as a decisional or internal range demand. We'll go and find out on the M15. But let's just mark that out. So price came, tapped into this wick here, which is the last point that broke this high here. But essentially that high means nothing. It's just this one was the one I was broken because this is the high that led to this low being taken. And then we went and broke that high. Right. Cool. We broke it with this candle here. So ideally, demand should have been down here, but we didn't tap it. We had this internal range. Sweet. But I think it was a smart money trap if we go on the M15, I reckon, anyway. So let's go on the M15. This was the week, by the way. I'll show you what happened in the week. I took one loss and that was it. I just couldn't find my A plus setup. I wouldn't even say my A plus setup, but just my bread and butter, bro. A setup without the efficiency of the pullback or without a supply being hit. Or demand being hit. Lovely. And it has everything I want. But anyway, so let's see what happened. This is Monday. Monday was here. We had the breaker structure. What led to that breaker structure? This was the last point of activity that we could see buyers and sellers. And we see the sellers here because we're in the up move. So we see sellers here that they're reacting with buyers right now. So you see the up down candles, right? We just find the last candle of that. What was the last down candle of that? Essentially was this one here. Because if you think about it and read internal ranges again, yeah. This high was broken. What broke it was this candle here. So ideally we should have returned and came down to here. So you're gonna come from, but we didn't. We had the internal after the BOS. We had internal range leading us price, like leading price. So that internal range would have been this point here. If I was to turn off the, yeah, let me turn this off. Look, this when it swept this high, so it was a new range, right? We came down, mitigated, broke it, new range, right? But we just kept going using internal ranges. The internal ranges, just like here, we broke it here, right here, broke it here. Oh. Broke it here, and we just used the internal demand that broke it again to keep going. So just mitigating. That all became liquidity. We took it. We took it, and then we went from here after taking it, tapping into the last thing. We went from here. So again, this same internal range demand is holding. If you look at it, it's still holding. Look at that internal range demand. It means that buyers are really there. But anyway, cool. Remember, that's not a decisional. Just remember that is not a decisional. But anyway, cool. Let me switch this back on and just run through. I don't know what made me touch on there, but I learned a lot of stuff this week still. I won't lie to you. So cool. London Open. At this point here, what have we done? We've basically just gone and broken structure and hit this point here. So we've broken, let's say, a decisional, right? We could say it's a decisional, right? Because it's not really a decisional. Yeah, it really is though. Because this led to us tapping into here. This led to us coming and tapping into here. this was the highest point of that. So we used that point, bring it down. So this would have been a decisional, ideally, and we broke that here. So this would have been a decisional, that would have been extreme. Even though this is the extreme, if you get where I'm coming from. Because we broke the extreme here. Because this was the last. You see with extremes and decisionals, yeah, you got to realize it like this. This, I don't know why I keep teaching, bro. But I'm teaching to myself, bro. Yo, so let's run through the week, innit? So obviously, what's happened? This week was actually 1 week here that is a weird one. I took a loss, and my P&L was negative for the week. But it was only one trade, 1.5 or 1.7%, and I learned a lot because I was just forward testing because my setup wasn't forming. So I just kind of just sat there and actually watched price like, and I realized like in accumulations, yeah, you know them trades that fly. And I used to take these trades, but I kind of restricted myself from taking them because I couldn't read it perfectly. Which is in accumulation, yeah, you have a move. Sometimes the accumulation is sweet and it taps into like an extreme or like a proper solid demand that we've been with sweet liquidity, like sweet inducement. Sometimes you have the efficiency of the pullback, but that efficiency of the pullback, because we know that the liquidity is so sweet, it will come and mitigate the demand. And if you fail to break through that, that is your sign to enter, because that move there flies. And that's what was happening this week. And I missed all of this because why? I said I literally don't take trades like that. Because sometimes I can read them right, sometimes I don't, and it just unnecessary loss for no reason. So I restricted myself. So W psychology this week still, I won't lie. Well, last week, well, Sunday still, right? Yeah, this week. But anyway, let's run through it still. So on Monday, this is what we was at. We currently had, wait, is that Monday? What Monday is that? I'm tweaking. Yeah, I'm tweaking. Sorry, man. I'm tweaking. This week is tweaking. One sec. Monday is here. So Monday is there. I'm just gonna go on this quickly and what the previous week done. So obviously the new week's about to start, which is Monday 6th. Yeah. So that's the new week starting, right? But this previous week, before we had that, what did the previous one do? We had this point tapping into its supply, and if I was to zoom in, because remember each candle is a range. Just view it as a range. That's what helps you in it. So this is a range, that is a range, this is a range, that is a range. What did the previous week's range do? Cool. We tapped into the extreme, or you could say, yeah, the extreme, or you could say even efficiency of the pullback, because it was a bit. We came up here, created this structure, and we hit, let's say, this point here, right? This mitigated that, and then we came down, broke structure, took out 1, 2, 3, 4 ranges. But now look back, this range, this point went and led to this point here. However, we led to this break here. However, we had a decisional. We had an extreme here and a decisional here, which led to break. We broke the decisional, tapped into the extreme. Right? We mitigated already. We've gone up. We're taking liquidity as well. We've gone up, but we haven't broken this point yet. You can come from. We haven't broken this point yet. So, what is this week looking like? Could we break it, or could we use this point here as efficiency of the pullback, and this being liquidity, and this being a point where liquidity could happen, taking this liquidity and then reversing and coming all the way down? Could we also have that? Because this move here will be finished. Because think about it, market moves like this. Sugar. Yeah, the market moves like this. Look, mitigation, and you could say this would be the accumulation, something like this. This being taken, that point being taken, manipulation, right? So accumulation, manipulation, distribution. Then sometimes you have mitigation again, and then you distribute again, right? That sometimes happens, but that's what, not even sometimes, that's how it runs, in fact. It's just, when we're coming, because this is a bullish narrative, so we know that, okay, cool, when we come back to the demand zones, we expect that move to carry on as a second leg, because it's that leg number 1, leg number 2. Sometimes leg number 2 is short, sometimes it's deep. Do you get where I'm coming from? Still leg number 2. But yeah, that's how I see market moving it, because liquidity cycle is also the same thing: accumulation, manipulation, distribution. Then you have a retracement, then you expansion again. Do you get where I'm coming from? This shows you that, oh, okay, buyers are involved. This is like the secondary buyers. This is where everyone kind of typically get in. Some people get in here, but this is like without confirmation. But you can do it with confirmation in a way. I just haven't reached that yet. But yeah, let me sip some water, man. Yo, this is meant to be me going through my week and I'm just yapping, fam. But anyway, cool. So we know that, okay, if we've taken a liquidity here, right, and we've broken it, remember we had a decisional and extreme. We broke the decisional, but we didn't tap into the extreme. Because remember, the extreme starts from here to even the close as well, right? The close of that is not only just the thing. So if we've gone and we didn't break it, right? We didn't break it and we went and hit this point here. Let's just say this point here, because that's where it seems to be. But that would be the efficiency of the pullback. Why? Because we're looking for a bullish move, but we tapped into this point here, the open of the last candle. But because we're on a higher time frame, it's not really it. You're going to come from the still demand down here. So we put at this point, and that's where this one came and tapped, and we're going up. So now think about it this way: we had the efficiency of the pullback, but the efficiency of the pullback failed to break this point here. Because think about it, this point has already been tapped into. So if it came here, we shouldn't really be going. We should just slice through it. Because look, there's nothing really there like that. Do you get where I'm coming from? You could say all of this is liquidity, but we moved up. But when we moved up, because we moved up, it doesn't mean that we could break it straight away. Oh shit! Because we moved up here, look. Because we've moved up, mitigating this point here. The open of this candle that led to this point being broken. So it's that leg number one, leg number two, retracement into leg number one's demand, move. So you know, come from now we're getting the break. So it's that we've got the leg number one in terms of market structure where it goes up, manipulation. This is accumulation, right? We go up, manipulation, distribution. But the distribution went, okay, cool. Now we're coming to mitigate. Ideally, we should have mitigated here and then broke this candle's high, but we didn't. We came and took this out. Still failed to go there. We came further, met the last supply. So at this point, if this don't break this, what do you think is going to happen? Most likely going to come take this out, this point out, and go further. Oh shit. And go further to like maybe these fair value gaps, or even this candle open, because this is the last candles open that led to this break. Do you get where I'm coming from? Even though it's in a weekly, we could come there. So to me, this could be a buyer's trap. I mean, sellers trapping buyers. Or it could be buyers actually in control. We don't know yet, but we just have points that we will use during the day that we can profit from, or at least trade from, and get a break even at worst. That's what we want to hope for, man. We hope for break evens. You gotta be a diligent trader, bro. Start first. You gotta be slow. You see how slow I am. This funded account is taking longer than it usually takes me. Still, normally I pass it in a week, but my last one I passed it in a week, and I blew that shit. But that's all psychological problems, isn't it? It's not really skill related problem. It's just that you know so much, that you see so much, and you have confidence in so much that you take dumb trades without confirmation. That's what was happening with me. That's why man started doing YouTube or content, let's just say. Because now it's that I gotta be aware in it. I gotta be aware how people are looking at me. So it's like, okay, cool. Now I only stick to what I actually trade, which is the same thing that I used to do. It's just I used to mix up with things. So you lot are basically helping me, and I'm helping you lot in it. If you don't want to say that. But yeah, man. But I yap too much, you know. It's brazy. It's brazy. I yap too much. It's not me, man. Let me get my Nuzi. Get my Nuziana. How many minutes? 14 minutes. I ain't yapped that much, man. You look, can't say I've yapped. Alright, cool. Let's get into it. So weekly. Okay, cool. Weekly, we know that this point here. So let's go on a 4 hour quickly. On a 4H, what are we looking at? Let me just, I hate how I got bare shit because you might get confused. But just don't get confused on it. When you see these things here, these are basically liquidity swept, right? And it's led to a breaker structure. So it's a new liquidity cycle and a new market structure cycle. That's the only thing I trade. That's what I look for. Because look, you see this point. You see why this point is so strong. Look, we came there. Doing all this up move. Came there. Where did we tap? Literally there, right there. And then where did we go? We came all the way down. All the way down and even took out this point here. Why? Because we had a new liquidity cycle and a new market structure cycle. It means buyers, this point here means sellers are in control. Like, think about it. Market structure is like Waze, yeah, and whoever is driving it, is it sellers or is it buyers? If sellers are driving it, bro, they're driving it where they want to drive it, bro. Do you get where I'm coming from? They're just using a tool. So if you see them two aligned, you're most likely on the right trade. But you gotta be careful with the efficiency of the pullback, because sometimes sellers might get too excited, for example, or buyers might get too excited. And this point here, they drove price so up, sellers let them to hit the efficiency of the pullback. So they broke the decisional here, right, and then met the extreme. So this point being broken, yeah, buyers were interested in that. These were like early buyers bringing it up. Now when price is coming out, everyone's gassed. So when they got here, guess what they done? They started buying, and you see this motion here. Then what? It was fake. Sellers step in, come down again. Now buyers are really involved. Do you get uncomfortable? Because this is the extreme. So now they get in now, and then they meet their efficiency to the pullback. Then they come down. They don't tap to the extreme open. They go up again. trap early buyers because they realize that we tapped into the extreme. Then we come down, take out them lot, tap into the actual extreme that led to us go into the efficiency of the pullback, right? This is the trades that I wasn't taking. This right here is what I wasn't taking. Like this accumulation thing that was doing me. Because now I can't get in. Look, price just rips. Because now look, we've got up here, and I don't really trade internal ranges like that, innit? But I do sometimes. But as long as it's clear, I will do it. But this one here wasn't really clear, so I couldn't really take it. I don't think it was my key window either. The snoozy got me still. But anyway, yeah. Damn. Bro, this lemonade thing is strong, you know. This shit's meant to keep me awake. Shit right now got me dizzy. Wait, let me put that away, man. Fix that, bro. Can't be letting a little snoozy do me like this. But yo, what was I saying? So yeah, this is the accumulation I was getting me, innit? And obviously, what I basically found out was, yeah, I'll show you that here and I'll show you the thing after. If I go here, yeah, and go on a... No, let's stick on a 4H. If we pre this, yeah, look. Same thing I said with market structure, yeah, look. I'm going to draw on it. This is the high, yeah, that broke this low. So we went, broke it, and make it red. Remember I said, we break a high, market goes like this, and it has to come back, and then come back down in it. Cool. But sometimes you get this. So you get, it stopped here, right? And then it didn't tap into that point there. And then it went up, right? This point here, and then it came down. This is a new market structure, right? Because it's using an internal range. It didn't come and mitigate the decisional or the extreme. So this is basically the extreme. Maybe if we break this, no, this is basically the decisional, you could call it. I call it the decisional because it's the one that caused us to actually meet the buyers. Do you come from? That's what I call it, but it's an internal range. It's not a decisional. The decisional would have been somewhere like here because we had a build up and inducement, which mitigated another build up and inducement before we broke all of this. Do you come from? So that is the decisional. The decisional's here. But here is the internal range that led us to meet the buyers, which is the extreme. This extreme here, the open here. Right? If I was to even do this, let me see. Yeah, this is literally here. That last candle here. If you can't see it, let me show you. This candle here led to this break, and further breaks. So is where buyers really started going. Do you come from? And this is the last candle. Ideally, it's this one here, but because this one didn't break this one, and this one did, we will use this one in it as the extreme if we're refining it. After this one, I won't lie to you, it will be this one here. But this has already been mitigated, but we'll still use this one because you never know. We could just take out this liquidity and still go up. But the whole point of using a point of interest is you're looking for a new liquidity cycle to happen there. So at this point here, we're looking for a new liquidity cycle to happen. Let's go and see if we got that. So remember I said, yeah, this now becomes an internal range, right? Which led us to obviously meet in this point here. I think we will put it 2 though. We can put out the wicks as well. Since it's a 2-leg candle, we can put either there or there. But I just know this is basically the midpoint of the whole thing. Will be the midpoint of this range. Look, we wait the midpoint. You know where I'm coming from. But I just typically use both of them anyway. But look, this led us to actually tapping into this and taking out this point here. This hasn't really been tapped in, you could say. It's a weird one, innit? But I typically just use any of the two. But there is the whole zone. Ideally, this is the whole zone. But you can just keep refining it. If this violates, well, put it to this thing. So you go until you get the new liquidity cycle that you're looking for. If you don't get it, it's not a trade. So I'm just gonna leave it where I left it. I think it was around here. Nah, around midpoint here. But anyway, cool. So this led us to tapping into it, you could say, and we led to a new internal break, right? So it's broken 1 already. Cool. So deep, we have a change of state of delivery already, right? Because the internal bearish range has changed, right? Where is the change of state of delivery? So this is I'm coming to realization, epiphany that I had in it. Cool. So we've had a new range, right? Cool. And then we've gone and met the efficiency of the pullback, basically. The last point, again, we can refine it to this point here because the open failed. You can come from. So it's this point here. From this point here, we had this new liquidity cycle, right? And remember, this is the internal range. Look, we took out this low here. And then we went all the way up and tapped into this point here. And then we had a new liquidity cycle. So this point here would be my new range, right? So we had a new bullish range that led us to hitting the efficiency of the pullback. This new internal liquidity cycle came and broke this point here. So we have a new liquidity cycle, right? Because we came down, didn't break it once. This is the decisional, came down, broke this point here. So this is a new liquidity cycle and a new market structure cycle. Then what do? We came down, mitigated this point here. Why? Because it's an internal range that led us to break in this point here. This point here was a one break, an extreme break. Do you come from? We didn't come and mitigate the extreme. However, we had this internal range, and then we came. I think we took it out. Let me see. Did we take it out? No, we didn't. We didn't take it out. Let me just take out this. So this is how I just pre the market, bro. When you view like this, it's a bit simpler, isn't it? That is a bit simpler. And I'll say that Wakara made me like I wouldn't say he taught me this exactly in terms of the new range and all that, but he gave watching him and adding that to what I've learned already just gave me this epiphany in it. That the market just moves like this. That it just goes like this. Up, mitigation, that's the new cycle done. The new cycle could start here. Down, down, breaking this point here. And then we'll come mitigate, bam, you gonna come from. That's a new cycle. This point here is a new cycle. Why? Because leg number one, the extreme, decisional, which led to the break. And then we just came back, mitigated, maybe the decisional demand, and we came down. You gonna come from. That's how market moves. And then from here, we can again go up, down, mitigate this point, and then carry on going until we meet this point maybe. And maybe we might come all the way back down to this point, and then go and break this point. And then breaking this point, let's say we've done something like this. Now we can't mitigate this point because why is it decisional that led to the break, and then we keep flying. But anyway, that's just how the market moves. Oh, whoa. If the market didn't move like that, argue with yourself in it, because I see it every day. But anyway, does it? Cool. Does it here? Yeah. Cool. We mitigated. We didn't really mitigate. It's just an internal range. We went up, met the efficiency level. So this is the actual extreme that led us to meeting there. But this was the point that led to the touch, right? We came and broken that point. Cool. We came up. What did we mitigate? The extreme. Remember I said it's a 2 leg. 1, 2. We came to the extreme. We broke the decisional to bring in buyers, right? To bring in buyers because now they're gassed. Buyers are gassed because we broke this point here. But remember, it had no inducement in it. Hence why it failed. But this one did. We took out this high, tapped into this point, and then we came down, broke this point. So cool. We've tapped into it here. That's the mitigation. Remember I was saying we have to break this now. It's not a law in it. Sometimes you break it, sometimes you don't. It depends on the validity. Why can't we say that word? It depends on how strong the demand or the supply is. Do you get where I'm coming from? Like for example, this had no inducement. It was a weak one. We know that already. Equal lows, trend line. Is liquidity. You know that it could fail. So when you see this as a mitigation, you know that this is likely to fail. It's likely that this will pierce it, and that should be your TP ideally. But taking this from a point where it's on a high time frame, you know that. Like for example, on the M15, when this happened, right? And let's say I got a confirmation, which would be here, right here. That would be because this tapped it, this went and broke, this candle's high. That's a new. Because remember, this candle's a range. This is also a new range, and that new range broke the previous range. So now we have a demand. Just view it like that. Doesn't mean that the demand is valid. You can qualify it by it having a new liquidity cycle, and in this one we did. Why? Because we have a new liquidity. We have liquidity here, trendline liquidity, equal lows liquidity, and then what do we have here? A point of interest, a point where we expect liquidity to form. Liquidity formed. Liquidity was taken. It was presented and taken, and then we had a new internal range structure. We came down to that mitigation. If I was to, let me just go back. Let me go. One sec. We'll see on an M15. So think of it this way. Remember what I said, yeah? This is the point that caused us to tap into the buyers, where the buyers are, yeah? So if that's the point, if we break it doesn't mean we're bullish. I'm not saying we're bullish when we do that, because sometimes it's a trap. I'm just saying we have a change in state of delivery. Do you get where I'm coming from? Because that point led to us tapping into meeting the buyers, basically. So the buyers, because we've met the buyers could now drive price further up, because from here we should go and make a new high, right? But we need to check. The way we check is, okay, cool. We have the change in state of delivery. We have the new liquidity cycle taking all of this point out, right? Plus this equal lows, right? And then we've tapped into a point where liquidity should form. So now we're just looking for a new market structure cycle. It's not a full new market structure cycle. It could be an internal market structure cycle. Why? Because candles, each candle is a range. Even on the M15, but on these candles here is a range. I'll show you something. Look. This candle is a range, right? And there was a wick above it. This wick here is where buyers and sellers had an interaction, right? And sellers won. Let me just put this as change state of delivery. Right? That is the point, yeah? Cool. And then this point is where buyers initially got in. I'm just going to do it like that. And then now we're going to go on M1. And you're going to see how clear it is. Yeah? Cool. So we tapped it here. Buyers took control, right? We haven't finished the delivery yet. Price still came down. Mitigated this point here. Taking out this low here. I don't know if you can see it, but let me just move this down. Look, taking out this low here is liquidity as well. Right? You can see it. Oh, you can see it. So now we have a new liquidity cycle, right? Because we took out this low. This low was one of the ones that led. This is a decisional that led to us breaking this point here. This up candle's high, right? So it had a new bullish structure. So it just had a bullish structure without an inducement. We came down, took that low, plus these lows. And then what did we have? A new liquidity cycle. What led to us breaking this? It was this point here, and it was this point here. We tapped it, broke it. We tapped it, came down again, broke this point, taking out this low, because this one didn't take it out. So ideally, it's even this candle's high. So this candle's high. This is how you just read M1, bro, because you just understand how price moves, and every candle is a range. Doesn't mean you trade all of them. That's why I use key windows to limit me, because I used to go crazy with it. But what was I doing here? Let's just put BOS because it's clearer. All right, cool. So we've taken that point. Remember, the demand that led us to all doing this is all here, right? And we know that is actually the whole candle, but we haven't broken the candle high yet, right? So we've come up, but we haven't tapped into the supplies yet. So we know that we have an efficiency in price, and we need to go and balance it, meet sellers, sorry. Buyers are in control now. We've tapped into a point where they should gain control. Now let's go and meet sellers to see if buyers are really strong. Just think of it like that. Just think of it like that. If you think of it like that, you always wait for the right thing, the right points, and all you're looking for is a new liquidity cycle and a new market structure cycle. Because that's what I've been using. That's what led me to like figuring out this accumulation thing where buyers took control, right? We know that sellers are here because this is the low that led us to coming down. So buyers are here. So buyers took control here. New liquidity cycle. Let me just draw it. New liquidity cycle taken at this point. Then this point, remember, led us to doing that new thing. So we broke it. What led to that? This wick. See how price doesn't lie, bro. I'm telling you, when you just read it like this is just a universal language for price, I reckon. Yeah, look. What do we have here? What do we have right here? Did I not say we hit price just moves like this? Look. This, down, and then this. This point, we validate this point with a liquidity being taken, because then we have a new liquidity cycle and a new market structure cycle breaking a high that led to us doing that. If we break this, sometimes it's a decisional, so we call it a change of state of delivery, right? That could also be here, but we know that this led to that move of us taking out this liquidity. Liquidity was taken. So just know that when liquidity is taken, cool. Sometimes we don't tap into the point of interest and liquidity just take control. But remember, because liquidity is taking control, that place there is like a trap. So we're gonna revisit it later on. I'm not saying immediately, but we might revisit it later on. Sometimes it could be months. It depends on the time frame you're looking at. Sometimes it could be days. Sometimes it could be hours. But that's what we call a smart money trap, right? Because it didn't tap into no point of interest, a point where liquidity should happen, but it happened before it. So we know that people front run it. If people front run it, we know that, okay, cool, they bought at higher prices. So when we come there, guess what? We can take them out. You can get cheaper because they didn't actually buy at the point where they were meant to buy it, which is this point here. So that's the way I see it. So if you understand it like this, I feel like I'll help you in it. But sometimes, oh shit. So let me just tell you the bit where it used to get me. So cool. Now I know that buyers are obviously new liquidity cycle, right? We've kind of mitigation. Mitigation is where you get the actual distribution, because this is like the manipulation, and then them showing us that this is a manipulation because we broke this point here. So now they come back down, because remember, sellers were here. So people were looking to sell here. But now sellers are thinking, okay, cool, this is the new liquidity cycle, and we're going to break this point. So they're thinking, yeah, I'm even getting it for higher prices so I can sell down even more. That's what they're thinking. So they start getting in here. But when price comes down and mitigates this point here, even when it breaks the open, people are not even getting in even more, right? When this happened, look, in fact, when this happened, people were into shorts. Because remember, this candle here is a range. This candle broke that range. This point here, people were gassed to getting at the open here. Price tapped into the last point here, and it rubbed all of them out. That's why price rips. So you see when price rips like this, yeah, it's because of these accumulation things here. But we'll do it again, look, so it rips now. So now, this move here, ideally, this is the mitigation of this move, right? That broke this point here, you could say. But it's just to go and meet this point here. But when it breaks it, this becomes one leg. But currently, this is a two leg because we went and met the efficiency of the pullback. So when we come down now, you don't want to be buying here no more. Why? Because we've met the sellers we've gone to the seller's point. And guess what we have? A new liquidity cycle. What do we have? Look, these points here, liquidity cycles happen. Just think of it like that. Draw out those points and then look for a new liquidity cycle. But you see how this one's not valid, right? Because we've already tapped into it. Look. This is the open, yeah. This move here, so the extreme is here. We went all the way up, and you could say decisional was here because we took out this range low, right? But did this break? Let me see. Yeah, we can call this one a decisional. We can call this one a decisional. That's why we had this bounce here. We can call it a decisional because it led to two internal breaks. Look, it led to this break, and it also led to the previous candles high. Yeah, this candle's high. We also broke this candle's high basically. But yeah, well, how many minutes? 35 minutes. Damn, I'm making this shit long. Sorry guys, just 2x it, innit? But anyway, cool. Price came, tapped it. So this is a one leg, remember, because from here, that's when we went and done this move. But obviously, this point in there, let's just, if we go on this is on an M1. It's like a, yeah, is a decisional. Is a decisional in it. Because we broke this point here. This point led to this break, and it led to us tapping into this point here. So this point, when it was broken, you now have a new liquidity cycle, right? And a new market structure cycle. So what do you expect? A mitigation for it to be broken, this point to be broken next. And then what happens? Price goes, so look, leg number one. In fact, it was just leg number one, bro. Let me not tweak it. Leg number one, breaking it, right? So when we came up, this point here is invalid, right? Because it was part of this move that broke it. Where you gonna come from? Look, it was part of this move. I need to remove these. Look, this move carried on from here. You could say, yeah, we opened and went up here, or you could say we came down and went straight down and then went up. Where you gonna come from? Because we open right here. So if we open here, we literally went down, following this thing, and then after we went up, and then after we went up, the new candle opened, then we came further down. But this was already broken. So it was broken from this move here. So it was a one leg. So we know that this would be the extreme, right? And from the extreme, we should do the mitigation, the same thing I was talking about. Extreme supply. We should do the same thing I was talking about. Look, new liquidity cycle, breaking this point here. So leg number one, right? We didn't touch it. We touched it here, but it didn't lead. It broke. Cool. It broke this point here. Change the state of delivery. This point here, you could say you could have got in, but it didn't tap the open, so I don't really like doing that. So I wouldn't have got in here anyway. But cool. Price came down, had the efficiency to the pullback, which is this point here. Right. This point here. Again, it could be anywhere there to here, just as long as it's the low and the high of the previous. So it could be, ideally, if you're looking at it, is this whole point here? We're on M1. Is this whole point here? But you refine it. Okay. This candle's high, low didn't get taken. This candle's low didn't get taken. This candle is low didn't get taken. So you can just do midpoint here with the last down candle, because this point here was broken. So price came, tapped it, new liquidity cycle again. Remember I said, because this is a point. One sec. And just make it as an internal demand range. This is an internal demand range because it didn't tap this point here. Just do it like that. I'm telling you, you're going to miss moves. It's fine, but it's better you trade like that than to trade anything else like this. Because sometimes you get donkeyed. And that's what used to happen to me. But anyway, price came here. Look, liquidity. This point led to us digging deeper. We broke it. But you can't get in here, right? Because it's the efficiency of the pullback. And then we break it. But remember that this move here is just a decision of a reading. In fact, the real move started from here, coming down. And this is the cycle we're in. We're looking for the mitigation to carry on going down. Hence why our price went up, because this was a trap. Breaking this point here, smart money trap, equal highs, these candles highs, taking it here, we came down, met the efficiency of the pullback, now we went up, tapped into the actual extreme that led to this break, this change of state of delivery here. Remember, we found our pattern, this point that led to us tapping into this point. This point is a new liquidity cycle happened. We came down, taking the previous point that led to us getting there, because it broke D sellers here and tapped into D sellers here. We took that out, so we have a change of state of delivery. We came down. We haven't tapped into the extreme yet. When you have a change of state, you're looking for this point here to be tapped. This efficiency here, ideally. So it's this point here. Oh. This point here. But you just refine it. Daily can do that candle, that range, because it's that range broken and that range broken. So you can do that. And we came and tapped into that. When we came and tapped into that, what do we have? A new liquidity cycle at play as well. Look. This is all liquidity now. All right, we tapped into this point here. So at this point here, remember, we're meant to come and make a new lower low. This is where it gets techie, because at this point here, think about it. You have this that's come down. We haven't broken that yet, so we're still bearish. And then you have this, right? That's telling you that, okay, we're bearish now because we've broken this point here. Because we're in from here, taking out this liquidity here, tapping into a point where liquidity should happen, and you have a breaker structure. So upon the mitigation, we should make a lower low, which we do. That is now complete. That's the market structure cycle complete. Look, down, down, complete. Look, up, down, complete. It is complete. So now a new liquidity cycle could happen. But if it could happen, are we in a point where a new liquidity cycle could happen? Yes, we are. Have we got liquidity that we can take? Yes, we do. Now, what we're we waiting for? A breaker structure. So this is the point where it gets me. I miss these trades. And that's what happened to me this week. I won't lie to you. These kept happening. They kept happening. So do you know what I done? I went study mode. And I ended up, bro, preying all of them. So now I have the bullish one. So I'm going to go through the bullish one with you lot. Yeah. So the bullish one, exactly what you're essentially looking for is, this is a smart money one, isn't it? Smart money trap one. So we don't tap into the extreme. However, because we have a new liquidity cycle and a new market structure cycle, when we come down, this will be called a structure inducement. Sometimes it taps into the extreme, sometimes it doesn't. And this becomes another trap as well later on that we might come and violate. But this is what happens. And price goes one leg, two, breaks this point here. But this point here, remember, one leg, two. So the signal's broken. So these demands are valid. Yes, we're in efficiency of the pullback and we could violate. We could expect a new liquidity cycle. Yes, but sometimes it doesn't happen. And in this case, it doesn't happen. So, but we need to gauge this point here because this is where the money is at. Because you see this, you get break even in 1 minute, bro. I swear down. That's live forward testing. This like German session in a forbidden session. German 40 in a forbidden session, which is the new 4 hour after London. I'm telling you, look, it was like crack. I didn't actually execute it, but just because obviously sometimes I read it wrong in it, and it's hard. But I've kind of simplified it now. So now you're just reading market structure, like the rules of market, like the roadmap of market structure. Look, liquidity taken, new liquidity cycle, new market structure cycle, because we broke this point here. You know that we're coming from mitigation to come and break this point here, and that's the objective done. Cool, that objective is done. We've done that. We came up, mitigated the previous one that led to us breaking here, because this one is important because it led us to tapping into the demand that took out this liquidity and went here. So ideally, what we're looking at right now is we have a liquidity cycle and a higher time frame, right? This point here taken, liquidity cycle and a new market structure cycle because we broke a previous higher time frame ceiling. So now we know that the demands are valid and we're looking for price to come to those demands so we can take trades off those demands. It comes here and taps it, right? But remember, this one's flawed, right? Because it didn't tap into the extreme, the original, like what actually caused this point to go up. The decisional, I think, was broken. The decisional will be broken because this will not be a decisional. Which you're gonna come from. So it was a smart money shot because we came so close to the extreme. That's why I drew this. But anyway, cool. We didn't tap it. So we tapped it here. People are thinking it's the actual demand. And ideally, this happens during Frankfurt Open. And then London does this. And then we go. And I think that's what happened to me. But anyway, enough of the happened. But price broke. So we have a new market structure here, right? So remember, market structure is just us going up, down, mitigation, and then coming down again. And that's what we have here. But this one has no inducement. Just remember that. So we came down, broke it. Market structure follows. We came back, mitigated, 2 leg, broke. Tapped it. But when we broke now, think about it, it's done. Market structure is done now. New liquidity cycle could still happen even though we've broken that demand zone. Because you might not see it as this is a trap, but you could just view this point. 1, 2 is done. Why? Because what? 1, mitigation, 2 is done. A new cycle has to begin. So if you come here, you want a new liquidity cycle to come, something like this, and then we go down. Just like what happened here. Look. Up, liquidity cycle, market structure, boom. Why? Because this broke this point here, which is an internal low, which broke this point here. Did you know where I come from? So you just read it like that. It's just 1, 2, 3. 1, 2, 3. 1, 2, 3. Look, so this point here, 1, 2, 3 is completed. And what have we done? We've taken this as liquidity. So think about it. A lot of people are trading like this, hoping to get in here. And if all their stop loss being taken out, what do you think is going to happen? This is the point where, like what Carl talks about, the elastic band being stretched. Think about it. Buyers were all here. They got stretched out. And the real move is actually about to happen. And we went 1, 2. We got our confirmation that we're bullish. However, we have the efficiency of the pullback. But remember, this efficiency of the pullback is useless. Why? Because it has no inducement. It's not useless, but it just has no inducement. However, this could be the inducement. So we're scared. That's what was happening to me. I was scared. I wasn't getting on these demands here, even though I knew. And then what happened is, this is where price flies by, because there's pressure of sellers and there's pressure of buyers. However, buyers ones are stronger. And plus, because we haven't tapped into it, I was a bit nervous. But I realized, bro, after the smart money shot has been taken, if you have that in a new liquidity cycle plus your time window, brother, take it. So going into next week, well, tomorrow, I'm going to start reading these properly. I call it the breathing pattern. If you go on my first ever TikTok video, I think that's the first thing I call it the breathing pattern, how price breathes basically. Inhale, exhale, inhale, exhale, inhale, exhale, inhale, exhale. Do you get where I'm coming from? The rhythm has changed. Just remember that the rhythm has changed. Look, inhale, exhale, breaking the last inhale point. So we're coming back. Inhale, exhale, completed. Inhale, exhale. Because this didn't have an inducement, this struggled to come down straight, just like how this one did. The reason why this came down quick is because it had an inducement. Sometimes, I'm not saying that's what happens all the time, but sometimes you get accumulation and then you see a rip, just like how this thing's going. But yeah, what you want to do is this point here, we know that is it, even though we know is a new liquidity cycle, because where at this point here, a new liquidity cycle happened, taking out all of this, and it became a broke structure. But this structure is manipulated because you know that the first one was manipulated. It didn't really tap into this point here. So if that was manipulated, this has come to get manipulated because that they manipulated it here because they know that they can't really take it lower. And then they came, took that point where they manipulated it, and then started going, and then this ripped. I won't lie to you, this ripped, and this kept happening the whole. Look, same here. Look, new market structure cycle, and then it just rips. It just rips. It just rips. It happened to me the whole week, and I was thinking, bro, what is going on? Like, I know these are my points I need to get in, but I'm getting my invalidation. Like, I can't take it because now if I take a loss, is that, bro, you had your invalidation and you knew it and you still took it. So I was like, right, what's really going on? But sometimes you have to use the pressure of buyers and the pressure of sellers and see, you have to weigh it, which one's stronger, and have the invalidations for it. So for example, if the seller side, if we're bullish like this, and this point here had no inducement, if we come there, you know that, bro, you can buy because it has no inducement. So there's a low resistance liquidity point that we can take it because there was no up movement and a sharp down movement, breaking the previous low or the previous high. So yeah, to me, this is all low resistance liquidity. So I know that when we open, we should take this out, and we'll see tomorrow. We should have this point broken. Why? Because we had no inducement there. This point had an inducement, but that's Asia high. That's also a trap. You gotta come from. So think about it. We've tapped into the extreme. People are thinking we're bearish. We're now thinking we're bullish, right? Because we're going up. If you go and qualify the seller's view, have they got a strong point to be bearish? Here, there's no inducement. Here is Asia high. Come on, mate. Which was the efficiency of the pullback. So now this is also going to rip, and that's exactly what happened here. Look, and that's exactly what happened here. Look how it's gonna rip. It's just gonna fly. Because remember, it's the efficiency of the pullback, but it's gonna fly. It doesn't mitigate the demand zones, right? Because it's fighting the fucking, sorry for my language, but it's fighting the sellers, because it knows that the sellers, it was just liquidity. We just created liquidity. That's what it done. We just created liquidity, and we came and took that liquidity, and now we're going, and that's why it flies like that. So ideally, the entry is somewhere here where we was looking at, which is the point where I was talking about it's like an infliction zone. This point here, because market structure is bearish. However, at this point here, we can start a new liquidity cycle, and it's this point and that point there. So we've broken this point. All we need is, this is a point, because we've read it as which one is like, think about, because we still haven't tapped into this point. I can't, at this trade I didn't take it because we still haven't tapped into this point yet. But I still learned that, you know what, because we had new liquidity cycle and a new market structure cycle, and we've come and taken that last point there, and after tapping it, we had a new bullish like momentum, like something showing us that, you know, buyers are really here. Yeah? But we just make the efficiency of the pullback, but it just shows that buyers are really here. This demand should be valid. The decision should be valid, because why? We know that this is the point that's being stretched out. But I realized that this weekend, and that's what it looked like. Actually, I forgot I even had it here. Look, and that's what it looked like. We came, took out this zone here, still didn't touch into the extreme. When then broke structure, came down, mitigated the extreme, the last point that led to us tapping into that. It led to a break. The way I'm going to start confirming is that it had to lead to a new market structure cycle, yeah, and tap into a point where liquidity should form, because that's a strong, that makes this something meaningful. Sellers would need to break that to confirm that the market is bearish. So we need to come there. Sellers' aim here is to bring price to here, and buyers' aim here is to bring price to here and break it, and then break past this. And that's exactly what happened. Look, bang on my key window. Literally when my key window was about to end, bro. This little box here, I don't know if you can see it. This little box here, bang on. Entry. This is the inducement. Leg number 1, leg number 2. Leg number 2 doesn't really need an inducement like that if it's mitigating it, is in the extreme of the, if it's mitigating the extreme, basically. Because remember, this is the candle of the extreme, so it's the whole point. So it's basically an extreme, if you think of it that way. An extreme and a decisional together. So you can just take it because it had an inducement and we had a new market structure cycle. So a new liquidity cycle, new market structure cycle, mitigation, we're going. So you're going to come from, but this point here, I didn't get it because I'm seeing this as an efficiency of the pullback. But with context, clarifying, did this have an inducement? No, it just mitigated the previous one. So it's just literally just a range that just me followed price, basically. You're going to come from, had no inducement. So there's no, like, anyone that bought here, like, they think they're cool. Like, I don't know how to explain that bit to you, but just know that it's shit if you ain't got a liquidity sweep. It's a dead high or dead low, and that's what basically happened. And I missed a lot of trades like this week. Another one was this one here. This was the, yeah, this is another one. Look, same thing, but the bearish idea. Look, this led us to tapping into the extreme. What did I think the internal range demand? Internal range demand, yeah. Cool. So we're bearish. This is the meaningful one because this is what caused us to meet the buyers. You went up. Any break structure here is not really meaningful like that because it's a one leg break. Ideally, this is it was a 1, 2 because this one took the high, tapping into that point there. A point where liquidity should happen, and liquidity did happen. Breaking structure because this is the point that led to that. So you're gonna come from. So is that we've got that we're bearish now. You've got the idea that we're bearish now. Cool. Price comes up, it taps this point here. It is the decision. You could say that because it actually led to this point being broken. So it's tapped into that. Do we get a new market structure cycle? Yes, we do. So now this is a new liquidity cycle, a new market structure cycle. Why? Because we've tapped into a point where a new liquidity cycle should form. This is a decision that led to that breakdown. We've tapped into that and we've had a new liquidity cycle and a new market structure cycle, right? Even though we haven't broken this, internally of this and here, we're bearish now. Do you know where I'm coming from? Cool. So what happens is we have the breaker structure. What happened again? We had a new liquidity cycle and a new market structure cycle. So this is one break, right? This is also one break. So you have 2, 1, 1, and you know that they both need to be mitigated. So first one gets mitigated because it's the recent one. It gets mitigated. We come down. Cool. But it hasn't broken this point yet. So we know that we still need to come further and mitigate. Or from here, we go further out. But what happens? Look, we mitigated here, came down, made a new low. This point here, there's not really an inducement. This is really just liquidity. So what does price do? So we went up, came down, finished it off, yeah. Leg number 1, mitigation. Leg number 2, done. We still haven't, we're still digging the point. Like we haven't broken this point yet. So from that point there, this is the demand. From. So we bounce off the demand, a point where liquidity should happen. What do we get? 1, 2, trend line, liquidity taken, new market structure cycle. However, we have the efficiency to pull back. So you don't get in here. You could, if you read it properly and you know how to read it properly, but I'm just giving you the blueprint. Price mitigates the next demand, and then we go meet the efficiency to pullback, which is the last point which led to us coming here. This point tapping into it was just a mitigation, but it had no liquidity cycle. We got the new liquidity now. Price comes down, gives us a breaker structure, right? However, this is also an efficiency to the pullback because it took liquidity and went up, broke structure. So this point here is also a POI, and we expect price to come and mitigate it. It does it mitigates it here, goes and meets the efficiency to the pullback. The decision that led to this break here, that led to us going up here. Do you come from? So we broke that. We have a new liquidity cycle. Now look, this point here came down, right? So it's broken this point here, this low here. But however, look at what broke it. Did it have an inducement in it? No, it was just liquidity. So what did price do? It went all the way up, because all of this was just liquidity. And we done another structure inducement. Because why? A new liquidity cycle plus a new market structure cycle. These demands or suppliers should be valid. However, we flew through them a little bit and pierced them just a tiny little bit. You're going to come from just to get buyers gassed. And then what do? This led to us doing that. So this should be meaningful. If buyers really meant that, they should have mitigated it and carried on. You can't come from, or came further down, done that as an inducement, tapping into this point here, which led to that break, and then flying. However, we didn't do that. We just broke the internal range. And then what? New liquidity cycle. Remember, high taken. So from here, broken, mitigation. We still haven't broken yet. But remember, what process are we in? We're still in a mitigation. So from here, we came down, tapped into here. But remember, from here, that is not the full POI. We've just tapped into the first POI. The whole POI is this point here. So we can just look at it as, okay, cool. This point here, ideally, is this point here, which led us to us breaking this point here. Because this was the highest high. So ideally, this is the whole range. You can come from this, not whole range, this is the whole POI. And we have the open, we have wicks, and even is that midpoint of the wicks as well. So I would say this point here is the midpoint of the wicks. Because there's a line with that line there, and that's like the midpoint of the wicks. And that's where we took out this point here. So this point did tap into that. Remember, we've broken it open. So we've gone to the midpoint now. So at the midpoint, you see this as a new market structure cycle when you're looking at it, and you're looking at these demands to hold. Because you see this as an internal range demand. It had liquidity cycle, yes, but it had no market structure cycle. It had a liquidity cycle, taking out liquidity, but it went nowhere and broke structure here. So you're going to come from, ideally structure will be here, but let's just say here, even a change of state of delivery couldn't break that. So this point here becomes a major inducement because why? New liquidity cycle, new market structure cycle, and we violated supplies of those, and then we came back down and broke the meaningful buyers who led price to go there. After we broke it, leg number 1, leg number 2. So this scenario here is leg number 2. Even though you're seeing this go down and this being broken, if this point here is not broken, it is still bearish because now we're just mitigating an extreme of that. Then from there, what did price do? Took out this liquidity. So new liquidity cycle, new market structure cycle, breaking this point here. Then we come and meet this point here. But now this point here is a bit fluky. You can't get in here. Why? Because you know that from here, we went and hit the efficiency of the pullback. However, it still qualifies as a demand. It led to this break. It led to, in fact, this point, where the red thing is 1, 2, 3, 4. But it's 1 and 2. Do you get where I come from? 1 and 2. And then this went, and then 1 just hit. Then 2 breaking this point here. But if you look at it, look, leg number 1, leg number 2, right? But remember, it's the demand zone. New liquidity cycle. Leg number 3, we're carrying on the buyer's move. So we're carrying on the seller's move. So sellers, we're active here. That's just how I pre it. Like, it's as simple as I think it can get. And that's because I won't lie to you, I'm a bit lazy. And to enable for me to get to this, it was a bit hard. But when I saw him doing this shit here, sorry for my language again. I'm trying to stop swearing still. Because I realize some kids are watching my videos on it. So let me just open my fridge quickly. Get me a new. But that's basically it still. So with that, let's just go on pre-current market. Let's go on pre-current market. Oh yeah, you know what, fuck it. At that point, let me just show you something quickly. But how do I come off this? So let me show you what happened last week. So last week, I took 2 L's. Well, a break even and a loss, I think. Yeah, a break even and a loss. So that's what happened to me last week, man. But this day, I'm forward testing this because myself, I was just getting efficiency of the pullbacks, bro. And I don't really trade them. But yeah, man, that's what I was getting. So that's why I got bun. And yeah, this one here was the loss that it hurt me because everything was right. It's just that I put my SO at decisional price, value decisional. I should have realized though, because decisional, we didn't really have an inducement and it wasn't close to the extreme, but we just violated it and then went to the extreme, took me out, and then went peak. I thought about it, but my key window was about to end, so I thought, yeah, let me go crazy with it. But yeah, that's the journey, man. I can't lie. I know we've been taking long in that, but let's go on pre. I was trying to show you how many days I've done. I should tell you somewhere here. The minimum days. Yeah, so 14 days. I can't lie. I've only traded at 14 days, and it feels longer than that, but it's 14 days. Before it used to be 30 days to pass a fucking funded account, but 14 days. Yeah, we're slowing it down a bit, but now we've realized, because in terms of the directional price, we know it's just the entry. Sometimes we get invalidations, but some invalidations we can still overrun it. So that's what we're going to be doing next week. So next week, that's what we're going to be doing still. So let's just see what next week is saying. Let's come off this thing. Let's see what next week is going to be saying. Cool. Quickly go in here. So now we go read all of this. What's the highest point? The highest point is this point here. All right. So that's the highest point. We haven't tapped that yet. That is still the efficiency to the pullback. We have liquidity as well. But anyway, let's read it. What do we have here? New liquidity cycle and a new market structure cycle. And we'll come and mitigate it. So we know that, okay, cool. Upon mitigation, we should expect this to be broken. So you're not really looking for shorts no more. Do you get where I'm coming from? You're looking for longs. So if we're looking for longs, let's go on to M15 and see what's going on there. Let me take up this thing. Yeah. Let's see what's happening now. I want to wipe this out, but yeah, let's do that, man. Let's wipe out. We need a clean one for the week. But we had no, we'll leave it. But anyway, what do we have here? We have these equal lows, right? Taken. Then we have this point taken. So this point here was taken. What do we have here? New liquidity cycle. Low liquidity. Fucking hell. So we have this point here taken, and it's gone and taken a point that led to that happening. Alright, cool. And we know that was an internal range, BOS, change of state of delivery. But if we look at it, this was a one leg break. What led to that? Let's go and see. Did we consider this as a decisional? A point that led to this, so it's valid. Decisional. Damn, man. I need to delete. I thought I deleted some of this shit. But swearing is going to be hard, man. Not swearing is going to be hard because I just keep doing it. But anyway, cool. We can say this point here, right? With the imbalance. So let's say this point here. So cool. That could be a bearish decisional because it was the last point that led to this break and it led to that break. It has two ranges broken. So we could see something happen there. What could happen is if, let's say, we build up liquidity here and then we take it and tap into it, it's valid. But if we just go straight there, brother, that's a bit dodgy. You got to be careful. But anyway, because it's a point where liquidity could happen. That's what we just it's not saying we're not saying we're going to move from there. It's just a point where liquidity could happen. So just expect that liquidity and then confirm it with break of market structure. I mean, a new market structure cycle, and then you're good. But yo, this video is getting long as an hour already. That's what I'm looking at. So right now, this is the new point. When I open my charts, are we there? If we're not there, how are we getting there on the lower time frames? And then I see what I can do. But currently, you have a breaker structure, so we should ideally come down. This is the decisional, right? And that would be the extreme. The extreme that led to that internal break. Literally, that's what I have. Change the state of delivery. This, and that. Until we get here, or until we're here, or until we have a internal range manipulation with liquidity leading it and a new market structure cycle internally, I'm not, and we haven't reached here yet. I am not trading it. So you come from. So that's where it is right now. That's what we're waiting for. So tomorrow we'll see what German 30 is saying. Well, 40, 30, same shit. But yeah, man, that's the video done still. I want that. I hope you lot learned something from this, because I learned something last week, and even though I took a loss. But yeah, man, we go again this week. And yeah, hopefully we catch these moves now, because we get them.